everybody, how you doing? I'm John Kenney with, as you know me well, with Cotney Attorneys and Consultants, but I'm also with Cotney Capital, CIO over there. So I want to bring you into our new podcast series called the Cotney Capital Accelerator podcast. So this is part of our incubator program that we've been promising. So we're going to be talking to different successful industry businesses in different areas. They're going to share with you a lot of tips, a lot of information that you can use throughout your construction company, the construction business, not only if you're just a roofer. This covers anything in the construction industry because there's a lot of caveats that are very similar. Some of this will be roofing specific, but you will, no matter what you're in construction, you're going to get a lot of great tips out of this. So very happy today to have my special guests who are going to be part of a 6-part podcast coming up on risk management education series. So first, I'd like to take a moment to introduce Nick Ondo. Nick, how are you doing?
How are we? Morning, John. Thanks for having us.
Absolutely. Looking forward to it. And Tyler Kosis, how are you today?
Doing good, John. Again, thanks.
And you guys are both with Frank H. Furman. So why don't you take a moment and just pop into our audience here. You know, Frank, what's your company all about?
So, John, we're a construction-focused insurance risk management firm, and our company is just really focused around serving tier one, whether it be roofing professionals or construction-focused firms, and helping manage risk and protecting the assets of the firm. So that being the number one and most important thing is making sure the assets are protected.
Yeah, I mean, I'm going to tell you, I know from my 45 years experience on the other side in construction, insurance is no matter what it is, you need to have it, but more importantly, you need to have the right coverage so that when you need it, it is there for what you need. That is the biggest problem. Risk management was great looking at it. You try to always protect your company the best way you can. But I can tell you the inevitable, it's not a matter if, it's only a matter of when. It will happen to you at some point during your career in the construction industry. It's just one of those things. So I know today we're going to talk about something that's very, very important. Starting out with is going to be lack of asset protection and coverage. So I'm going to kick down on over you guys. Kind of, I think everybody feels if they just get an insurance policy, they're covered for everything. And I know that's pretty much general. Even with your auto at home or your homeowners, you just, okay, I got insurance, I'm all good. So why don't you go ahead and kick off on this topic here and let us know, give us some pointers on this.
And so absolutely. And one of the main things whenever we meet with a new client or prospect, we always recommend one of the most important things is reviewing the coverage of their subcontractors and their own. So part of how when we're pulling out some of the gaps or lapse coverage, whatever it may be, working with a contractor, we see when we're reviewing our subcontractor policies for our clients, how many holes there can be. So program review, getting into, of course, the certificate of insurance is just going to show you what the effective date is and what the limits are, but they're not going to show you the exclusions that are right within the policy. So we see a lot in the roofing industry specific, whether it be any type of open roof limitations, warranties, hot work, tar warranties, prior work exclusions, construction defect litigation being such a big part of what we do nowadays. These prior work exclusions, when you get a new policy, can really be an issue for a lot of contractors because it's negating completed ops coverage past where that prior work was done. And so what we like to do is just do a full overview of the policy itself, not just looking at limits and making sure that insurance is in place, but what it's actually covering. So again, that's one of the main areas where we would start off when evaluating a new prospect or client, that we want to see what they currently have in place, lift up where there may be gaps. Let's face it, there's enough risk that's inherent in the industry as it is right now, contractors. The insurance side of things, making sure you're covered is super important, and protecting the assets, again, number one focus for our firm.
Yeah, I mean, a couple of points I know you got coming up here, but like cyber coverage. I mean, I think a lot of contractors either think their regular policies cover that, which, you can correct me if I'm wrong, but for most times you've got to either have a rider or a special policy to cover. But hey, today with this ransomware and all the things going on, I mean, you can't sit back and say, hey, it can't happen to me. It's going to happen to the big guy. No, it happens to everybody now. I can't. I just did a whole article just recently for the IRE on the, cybersecurity and all that's going on. It's crazy out there. And a couple other things I want you to touch on. crime, most people I don't think understand what having coverage is because they're going to say, well, I'm not a criminal. Well, that's not really what it is, but I'm gonna let you guys hit it. And then I know one that really was close to mine. I mean, pollution, I think that, basically that's pretty much excluded unless you have it from what I've seen. But, again, guys touching that. And I'll tell you one, I would definitely want you to spend a few minutes on is that E&O and installation floater, because I can tell you that saved a lot of tails out there in the industry. Really, when it comes down, it's one of those that you pay for it, you hope you never need it, but my God, if you do need it, it's a great one to have. So I'll kick that over to you.
So when you talk about insurance coverages, like you said, most contractors think, okay, I'm covered, right? But that typically goes for automobile, general liability, and workers' compensation. All of the coverages that you just lifted up are what we call in the industry ancillary coverages. So the cyber, the EPLI, the crime, pollution, E&O, and installation floater. Those all cover little nuances that not many contractors realize are going to be excluded from their normal mandatory coverages. When you're talking about cyber, absolutely, the exposure is growing every day. And John, I actually was on that same article with you for the IRE. That's definitely one that we're seeing an uptick in both claim frequency and the severity. Right now, I say right now because it is increasing a little bit. The premiums versus the coverages that are available are quite low. The EPLI, so that would be employment practices liability. That's for discrimination of any kind, sexual harassment, failure to hire, failure to promote, those kinds of things. That coverage, all of these coverages are for what you're being covered for are relatively inexpensive. But like you said, you get it, pray you don't need it. But when you do need it, it is so important and so helpful to have your assets protected.
And if you don't think you need EPLI, the EPLI for protection for employment, just watch commercials on TV.
Right.
I mean, I want to say every lawyer, because we don't do that. We represent the contractor, but on our legal side. But I mean, every commercial is, hey, what can I get you? You feel like you're wronged. You feel this. I mean, you don't have to wait for it. It's coming to you.
Absolutely. And lawyers prey on that. Same with construction defect down here in the Florida market, but that EPLI goes across the entire country. It doesn't matter where you are. There are lawyers that are looking to help people, with quick fix settlements against the contractors that fire them for whatever reason, because it's very difficult to quantify the wrongdoing in that regard. So when we talk about crime, I would say that there are a couple of general liabilities that throw a little bit of crime coverage in there. But this would be more for if your employees were stealing from your company and things of that nature. That's where, if somebody takes a couple drills off a job site or a saw or something, that's a couple $100s. And typically it won't even touch after the deductible. So you'd be paying for that anyway. Where the crime can really become a balance sheet buster is if you have a brand new financial guy in the company and they dummy up a vendor account and they're, scraping a little bit off of each transaction and start to really rack up some financial impact to your balance sheet. This coverage would step in and protect your assets in that regard. Pollution absolutely is excluded from any general liability policy, John, as I'm sure you see frequently. That coverage from a pricing perspective, very minimal, but it is certainly a severity type risk. You're not going to get a pollution claim every policy period, but when you do, because it affects the environment, it's going to be a really expensive experience, and having this coverage is really important for that. And the installation floater, Tyler, you want to jump on this?
Yeah, and so a lot of our contractors say, hey, from an errors and emissions perspective, we're not doing any design or architectural work on this. Why do I need an E&O policy? And one of the main ones that we see in the industry that becomes so frequent is what's called contractors E&O. And what that mainly covers is faulty workmanship. And so a lot of contractors don't even know that this policy exists out there. We have conversations with prospects or clients on a daily basis, and we lift this coverage up, and they had no idea that, hey, in a general liability policy, it's covering any bodily injury or property damage that arises out of your work or product, but not your work or product itself. If you get towards the end of a job and find out that, hey, it failed inspection or for whatever reason there was some kind of faulty workmanship, The contractors errors and emissions side of things would pick that up. So the labor, the materials on that end of things. If you had to tear off the roofing system at the end of the job and there was $300,000 of materials that went to waste, that's where that coverage would step in. And so the installation floater, this is for coverage for materials on the job site or in transit. And so right now with material shortages, significant upticks, we saw, especially even around Christmas time, it always seems there's definitely an uptick in stolen material on job sites for whatever reason. But that coverage we see definitely very important, especially right now, what's going on in the industry from a material perspective.
Yeah, as a contractor, you got to really make sure you understand this. That's why we wanted to bring this out. You guys are doing a great job of getting this information and explaining it. You got to be careful what you contract into. This stuff is buried inside of your contracts that you're supposed to be carrying this coverage. So there's nothing worse than signing a contract and then find out you got to go out to market and try to find this, because it's not going to be very beneficial for you at that point. And E&O, that's a great one that you brought up about the contractors. But they do run into that problem as well. If you're doing a re-roof and it's your proposal and you are the specifier, which you are if no one else is given a set of specs to the owner but you to put it down, that's why you got to always think about this. Or whether you're a kitchen remodeler, it does not matter what you're doing. If your proposal is going to be considered by law, the plans and specifications, because you drew them up, you really need to look into this coverage, because one person looking at this wrong that goes after you can be a killer to your company in one shot. So great job explaining that, guys. Fantastic. Next one we want to cover a little bit is exclusions and limitation coverages. Workman's comp and GL and auto. I know this is not a huge long topic, but I know I get a lot of calls where people are confused. What do are there minimums? I know there's state minimums that people have to look out for. And then there's really the real world, what you really would recommend that people should be covering. So I'll kick that over to you now.
Certainly. So I'll take from the work comp perspective. What we see most often happening is employee leasing arrangements in the industry. There's definitely a gap for new contractors starting out, for roofing professionals specifically. No standalone carrier. When I say standalone, that's a fully encompassing insurance program that covers your company as a whole and not each individual employee. Most carriers will not take on a new roofing contractor in a standalone market. PEOs or employee leasing are used kind of, I view it as a stepping stone to the standalone market. And so what happens so often is, from a work comp perspective, one of our clients will hire a sub. They may have employee leasing. They hand an employee leasing program for their work comp. They hand a certificate to our client, and our client knows none the better and says, hey, they have work comp coverage. That employee leasing or professional employer organization only covers those employees who are on the roster. And John, so often do we see that there's guys that are left off that roster. When they do, those claims rise upstream to our clients who hired them with the employee leasing arrangement. So definitely from a work comp perspective, there's not many exclusions with work comp to be wary of, but it's more making sure the coverage is in place at all. And that's where we see the largest gap is employees left off the roster. I'll let Nick take the general liability portion of what we're seeing typically with exclusions and limitations.
Certainly. Tyler kind of sort of touched on a few of them. Roofing contractors specifically, where we see the largest exclusions is we look at a certificate of insurance and maybe it does have $1 million limits and the contractor thinks, okay, I'm covered, I'm good up to $1 million. When general liability, when we talk about coverage, that's where the largest exposure is to the insurance carriers getting a little crafty in the way that they word things and the way that they bury exclusions into that policy specifically. There are enough exclusions in the general liability space that I would say we could go on all day about it. But the largest being, I would say, prior work exclusion, the open roof exclusions, any water intrusion exclusions are all problematic from a roofing perspective. But any contractor for the prior work situation, I want to touch on that for a moment. So the general liability policy kind of sort of has two parts for a contractor perspective. It is your ongoing operations, so any jobs that you're currently on, but it also covers a 10-year tail statute of repose in the state of Florida. I'm not sure how it is across the country, but it's a 10-year tail in the state of Florida, meaning After the job's completed and, everything's signed and completed, permits are passed and all, the general liability coverage, half of that premium goes to cover that 10-year tail. So as you move on as a contractor, that first year that you do work, say you do, $1 million worth of work, in a policy that you don't have prior work covered, that second year, any damages or problems that arise from whatever it was that you installed in that first year, you will not have coverage for in the second year. So that's what I mean by a prior work exclusion. And those words don't look like any other words in the general liability policy. It's not like they have big red flags that say, hey, this is super problematic. It all looks exactly the same. And if there's ever any questions that any of the folks on this podcast have from an exclusion on the general liability perspective, we're happy to take a look at things and just guide you in the direction. All we can do is lift up our observations, make recommendations based on the portfolio that we have. But I'd say out of these three coverages, work comp, general liability, and auto, general liability is where we see the most coverage issues.
Yeah, and then just to touch on that from a GL perspective too, every policy is going to have different language for what they call their independent contractor, subcontractor warranty. That basically states what they need to do when hiring a subcontractor for that claim to be covered. So a lot of them will have wording in there that states something along the lines of that, hey, if you did not collect a certificate of insurance for your sub, if you weren't named additional insured, blanket waivers of subrogation, et cetera. Some of these things, if you did not do that prior, you could be subject to higher deductibles, and some policies will even exclude it. That's the most problematic. So reading the independent subcontractor warranties that are within your policy, very, very important from a GL perspective as well.
And I would recommend, honestly, if there's a list of exclusions that your insurance agent brings to you on the general liability policy, ask about it. Educate yourself, allow them to educate you. Your insurance, if you're, trying to go the distance as a contractor, it's not going away. And as you grow, the exposure grows, obviously, because the job sizes grow, the balance sheet gets stronger, and you have more to protect as a contractor. So take the time to really educate yourself on it. And like I said, we're happy to answer any questions there may be.
Yeah, at the end for everybody here, we will absolutely let you guys give your information out, how they can reach you. A lot of stuff. We're a lot to cover in a podcast, but it's so important. The potholes out there and the pitfalls that you're going to run into, you have to be very careful. That's why you need to partner with someone that you absolutely can trust and work with when it comes to insurance premiums, policies, reviews, and understanding, because this is a whole world within itself. Do you guys have any strategies, that to match financial objectives? Anything you want to fill our audience in out there on?
So when you say strategies to match the financial objectives, just in structuring the program.
Yeah, so you got, there's additionally insured, there's umbrella limits, I know one of the questions that I've come up for me throughout the years is, when you're doing your strategic planning, do I carry a $10 million umbrella? Do I not? What's the reason? Do I do this? All other types of, these risks, builder's risk one that comes up a lot out there, and installation riders, which we covered. But from a strategic standpoint, if I'm a new company or I'm a company that's been in business for a long time, and January is my strategic month planning, and my insurance renewal is coming up in June, just some tips and benefits of how should you look at that from a strategic planning standpoint in a company?
Yeah, and so absolutely. What we do is, John, typically about 120 days out with our clients, we do what we call a pre-renewal meeting. That's where we sit down, and that was what you refer to as a strategic planning meeting. And that's where we sit down and review any changes in the company, anywhere we look to save money. And when I say save money, reviewing the coverages that are in place, what's most important for you, what you're being contractually required to carry. And we sit down and we structure a program based around that contractor's needs. Right now, John, I'm sure you heard from some of your clients, the umbrella line of coverage is one that is absolutely exploded from a premium perspective. It is mainly stemming from auto, piercing through the first $1 million limits into the excess layers. And so we're seeing contractors typically wanting to reduce umbrella limits, which as insurance risk advisors protecting the balance sheet, we don't necessarily always recommend, but with that being said, we know that we got to meet our clients' financial objectives. So a lot of it comes what they're contractually required and who they're working for and what their true risk is in there. So, but the auto being one of the main drivers where that we see vulnerability in claims piercing through to the umbrella side of things. But and just back to your initial question on the strategic planning side and what we can do to look to reduce our clients' burdens is when you're structuring a general liability, on the general liability, when you're structuring a program, we have to sit down with our clients and we have to project what they think their revenues are going to be. John, whether it's if we project, say, 5 million for a contractor and they do 10, well, they're looking at an audit on the back end that's going to be double what we initially projected for their premium. With volume comes rate leverage. So if we were to project them at 8 million, say, off the bat versus the 5 they projected, sometimes we can go get rate leverage from the carrier up front. So that's one of the ways that we really look at the beginning in trying to help our clients, preserve some premium there on that end. But and we could go on in little strategies and what we do in our pre-planning meetings, but we look at it in those pre-renewal meetings and we just look at it as a full program, line by line, any ways that we look that we could reduce coverage while not exposing the balance sheet.
I think that what's most important, John, for those that are just starting out is talk to an insurance advisor that specializes in construction or specializes in whatever specialty trades are on this podcast, because each of them are a little bit different, right? You wouldn't hire an electrician to do a plumbing job. Don't hire a general insurance agent to give you specialized coverage based on exactly what you do, because a re-roofing contractor versus a new production work roofing contractor, all of those coverages change a little bit. The pricing changes a little bit. And it's so very important to speak with somebody that knows the ins and outs of the construction industry. Because if you ask a general special insurance guy what coverages are needed and what have you, they may not know. They're going to give you the policy that their underwriter says works. And what works for one may not work for the other. It may not be the most cost effective or comprehensive coverage for what each contractor does.
No, I agree. There's a great point. I think like our audience is realizing now how in depth and I'm going to use the term complicated because it is, but where you all come in is you uncomplicate the complicated. You make it so a contractor can understand what they need. You're absolutely correct. I loved your point about the revenue tied to it. We get that all the time. I'm going through that now. People are getting their insurance audits and they're calling up on our consulting side. And they're like, my God, my premiums have doubled. Well, yeah, because you based them off of X and now you've done 2 times X. So you have to be aware of this as you go through. It's pay me now or pay me later. That's why it's important to sit with a strategy, with people like yourselves there to get her lined up correctly, because it's very important. So we're coming to the end of the first of these 6 series. So are there any other tips or any final comments you'd like to make to that emerging roofing contractor out there?
John, we structure some of our clients, and I really think that everybody should carry one. It's essentially a list and a checklist of what our clients should be looking for from when hiring subcontractors. And I know I keep referring back to subcontractors because we know we're creating the needs of business and like you said, sharing for our clients what they need. But one of the most important things when we talk about risk transfer, and I'm sure in some of the upcoming podcasts we'll be talking about it, it's almost as important as your own coverage. Because you know what you're covered for and excluded. But when you hire somebody, that checklist can really be a good factor in getting a chance to understand what you should be looking for. So we try and educate our clients on that. That checklist helps them so they know what things to be looking for when hiring a subcontractor. And that's one of the tips. We're happy to share it. We have some just general, depending on the trade or the industry, we have some roofing specific ones. But essentially, it does in our eyes, it helps educate our clients on what they should be looking for. And it's a huge area of exposure, the downstream risk transfer. So
how's the best way for the audience to reach out to you guys to get this information or set up a one-on-one with you all?
Yes. So I could always be reached on my email. It's Tyler@furmaninsurance.com and Nick It's nick@furmaninsurance.com.
Really complicated email.
Yeah.
Sorry for that on a Monday morning.
Yeah.
Excellent. So what you just said, so the audience knows, actually the next one in this series is on controlling your subcontractors. So we'll spend our podcast going a little more in depth into that. Well, I'd like to thank everybody for joining us today. This is the first of the series. I look forward to many more. And Nick and Tyler, thank you very much for joining us. This was a lot of information, and I know people are going to have a lot more questions, but I recommend you join in for the following 5 that are coming up after this, because we're going to really break them down a lot more in depth into a lot smaller pieces for you to really understand. There's a lot here to do it. So that being said, thank you everyone for joining us in the first of this series, and we'll catch you on the next one.
Thanks for having us, John.
Thanks, John.